Indaka recession. Indaka was a situation that the value of Japanese yen was comparatively higher than currencies in other countries. This recession began in 1971 due to Smithsonian agreements that the yen was revalued dramatically overnight. The Japanese yen was revalued from 250 to 160 per US dollar. However, with the unchanged export, the income of Japan dropped accordingly as she was highly dependent on exports. Factories closed because of the low competitiveness of export and increased the unemployment rate in Japan. This caused a serious unbalanced wealth distribution. Under this situation, the people with more assets in hand tended to speculate the property and stock market. With the unstable economic situation in the property and stock market, bubble was easily generated. Therefore, Indaka recession was one of the causes of the Japan bubble. Monetary policy or macroeconomic policy. The monetary policy in 1986 to 1989 was blamed for the Japan bubble. During this period of time, the official discount rate of Bank of Japan (BOJ) was decreased from 5% in January 1986 to 2.5% in February in 1989. The drastic decrease in the official discount rate caused the money growth out of control. An economic bubble was easily formed by the uncontrollable growth in money. The macroeconomic policy was also a cause of the economic bubble. In 1985, Japan shifted from control economy to open economy, from economic power to political power, and from external demand-led economy to led by domestic demand-based economy. These changes made the decision-making difficult in response to the uncontrollable economic growth.
The Land Lease Law. The Land Lease Law was one of the major causes of the Japan bubble in 1989. It was a law that aimed at protecting the tenants from high rents. It restricted landlords to raise the rent payment as tenants could ask the court to summon for a hearing to set the rent price. Land lease contracts were also automatically renewed when it expired. Under this law, the rent level of Japan was much lower than the market equilibrium. Landlords would therefore rather left their land unused than rent it out. This act led to shortage of supply of land in Japan and pushed up the real asset prices. The land lease law encouraged people to gain from buying and selling of land and discouraged them to rent it out. Under the condition that land prices kept increasing, investors and landlords became irrational and thought that the real asset price would keep increasing regardless of the fundamental price. A real asset bubble was created and attributed to the cause of the Japan bubble in 1989. However, the Land Lease Law was not a cause of the credit crisis in 2008. Housing and land default in the United States in 2008 was mainly due to the problems arisen from the mortgage-backed securities, but not something like the Land Lease Law in Japan. Financial liberalization and internationalization. Financial liberalization and internationalization also played a role in the cause of the Japan bubble in 1989. During the process of massive issuance of government bonds in the late 1970s, individuals preferred to invest in the capital market rather than leaving the sum of money putting in banks. Banks became more difficult to raise capital due to the reduction in the amount of savings. Japanese banks tried to increase the real estate loans lending as they thought that loans backed by real estate were very safe. This perception made banks pay little attention to borrowers' affordability and the possibility of having an asset bubble. The eased housing loans provided a great incentive for investors to gain from buying and selling of real estates in Japan. This stimulated the gradually increasing housing prices in Japan and led to the formation of asset bubbles. In the end, the bubble burst and resulted in the Japan bubble in 1989. Similarly, US banks did not take the risk arisen from mortgage-backed securities into the consideration and let US housing bubble to form and burst. The negligence to the risks paved the way for the credit crisis in 2008.
Japan's political system is a typical bureaucracy. This unsound political system contributed to errors in economic decision-making. On the first hand, it made excessive intervention in the economy. The decision-making process was long, their responsibility was vague and inefficient. On another, the frequent change of cabinet affected economic policy continuity and stability, leading to errors in economic decision-making. The government of France, West Germany, Japan, the United States, and the United Kingdom signed the Plaza Accord in 1985. It allowed US dollar to depreciate in relation to Japanese yen by intervening currency market, and as a result, Japanese yen appreciated. Between 1985 and 1987, Japanese yen appreciated by 51% against US dollar. Therefore, US goods were cheaper for foreigners. In other words, Japanese products became less competitive and exports declined. This was a great harm to Japan's economy because it was export-oriented. Japanese economic growth declined by 1.5% between 1985 and 1986.
Stock and financial market. Problem in financial market also lead the way to the Japan bubble. There are two main reasons about it. The first reason is deregulation of financial industry, and the second reason is the protracted monetary policy. Deregulation of financial market. The deregulation of financial market changes the behavior of banks in Japan. Banks and individuals' behavior change from conservative to aggressive in investing their wealth. Firms finance in capital market rather than borrow money from banks. Then the profit of banks decrease. Banks need to expand their business scope and become aggressive to give out loans and engage in investment. As a result, the market becomes risky and full of hot money since the prohibition of fundraising in security market was cancelled. This made the Japan real assets bubble more adverse as prices increased more vigorously with more capital engaging in the Japanese real assets market. Monetary easing. The Bank of Japan decreased the discount rate from 5% to 2.5% and kept it for 2 years until 1989. This monetary easing policy provides cheap and easy funding for speculation. It is because speculators often want to create position more than their own assets. They need money to cover a gap in settlement when trading financial product. Then, the monetary easing create an easy access to finance these speculation position by reducing funding costs. Moreover, monetary easing make case a rise in stock market by bumping money into it. It will result in reducing capital costs and encouraging finance in capital market, for example, issue share or warrant. Last but not least, the rise in stock market and land will increase the asset value of a company. It will increase their financial ability as the value of collateral increase. Then they can borrow more money and repeat the vicious cycle. Similarity to the U.S. credit crisis. In terms of financial industry, deregulation is the common factors that contribute to both crises. In the U.S. credit crisis, deregulation makes the banking system fragile by decreasing the capital requirement. It encourages overlending and aggressive investment by banks. Debt ratio increased. Money supply increased, making stock market rise to a peak before the outbreak of the crisis. Similarly, deregulation in Japan changed the behavior of banks to become aggressive and give out loans, causing the overwhelming money supply bubble and contribute to the crisis. After deregulation, both stock market did extremely well before the crisis. It is also because the linkage between stock market and housing market in both cases were strong. On one hand, the assets market appears problem. On the other hand, stock market become fragile. So when the housing market fell, the stock market also dropped in case the financial industry collapsed.
During late 1980s, there was expansionary monetary policy and aggressive credit expansion in the housing and real estate market in Japan. While the market have not adjusted to drop in demand, housing and real estate prices raise very quickly when demand increases. As a result, banks expand their loans and real estate were used as collateral. Moreover, there are excess saving in the asset market. People tend to save a higher proportion of their incomes in anticipation of retirement. As a result, it causes an insufficient demand in investment. With a combination of loose monetary policy, innovations in financial technology, and bad regulations, inflation occurred in asset bubbles and a boom in the corporate investment. By the end of 1989, there was an escalation in land property prices and the rapid increased equity prices in the year 1987 to 1989, which were indicators of the bubble economy. Eventually, the asset bubbles burst in Japan with decrease in asset value, a debt overhang, and significant decreases in urban rents in some cities, and this effect continued to 1996. On the other hand, U.S. subprime loans crisis spread all over the world because housing loans in the U.S. has been securitized and sold outside the country. Many financial institutions in the U.S. increased their supply of loans to the real estate and the housing sectors as they expect the value of subprime would continuously rise. Many of these loans were securitized without being kept as assets of the banking sectors, so banks and mortgage companies became less cautious about their housing loans. As the subprime market in U.S. gained numerous steps, excess supplies was created in the housing and real estate market, which led to an excess supply of subprime loans created in response to an oversupply of housing. The financial institution began to sell assets and call in loans in order to reduce loss. As the value of market securities started to erode, lenders decided to raise cash, resulting in a wave of asset sale. Oversupply of housing occurred, which causes a rapid decline in housing prices, similar to Japan's experience in 1989. In both countries, a huge expansion of bank loans, especially those to the real estate and housing sector, is observed in their bubbles period. The real estate market is very slow to adjust to demand.
Let me now talk about the aftermath of the crisis.
I will first talk about the stock and financial markets. The stock market in Japan reached a peak in 1989. The Nikkei index showed 38957.44 points on the 29th of December in 1989. However, owing to the asset price bubbles, the economic downturn happened. The Nikkei index dropped to lower than 20,000 points in March of 1992, which was 50% less than the highest figure recorded in December of 1989. In August of 1992, the Nikkei index only got a figure lower than 14,000 points. Most of the assets were lost in this 2-year time. Some victims of the crisis were Sanyo Securities Corporation and Yamachi Securities Corporation. So what are the similarities between the Japan crisis and the crisis happened in 2008? Similar to Japan, the stock market of the US also fell from the peak to the trough. In October 2007, the US stock market was extremely healthy with a Dow Jones Industrial Average Index over 14,000 points. Even in July, the closing Dow Index reached nearly 11,000, despite the fact that the subprime mortgage crisis started to influence Fannie Mac and Freddie Mac, the two government-sponsored agencies. However, in September 2008, Lehman Brothers filed bankruptcy, and this led to a decrease in over 500 points of the Dow Index. A train reaction happened after the fall of Lehman Brothers. The Dow Jones average dropped more than 50% over the 17 months after the credit crisis, and with a total drop of 89% over the following 16 months, the index finally dropped lower than 7,000 in March. I will now talk about how the crisis influenced on companies. Owing to the decline in real asset prices in Japan in 1989, people's interest in consumption also declined. This caused a long-term deflation in the nation. As a result, the unemployment rate in Japan was kept to be high. The unemployment rate has been kept below 3% for more than 30 years before the crisis. However, the unemployment rate reached over 5% after the crisis. So what are the similarities between this crisis and the crisis happened in the US in 2008? Similar to the crisis in Japan, in October 2008, the Labor Department of the US announced that 159,000 jobs had been lost owing to the crisis in September. In November 2008, the department announced that the US had lost 240,000 more jobs in October, making a total of nearly 400,000 jobs lost in 2 months, giving rise to a high unemployment rate at around 10%. A big insurance company, AIG, faced difficulties in surviving as it has used up its cash reserve. However, as it was considered to be too big to lose, the Federal Reserve bailed out a $150 billion loan to the company. The US was considered to be in recession.
During the crisis, the investors are losing their confidence in investment. Both property and stock price decline. The banks which consider the asset price will continue to increase have an outloss of loans. And therefore, when the economy turns down, bad debts begin to sow. The banks are faced by bankruptcy. Banks are in trouble and waiting for the government to bail them out. But government can only bail out those banks she considers as too big to fail. As a result, most of the banks which are failed in withstanding the crisis go bankrupt. Even some of them were the largest banks in the world. Only few of them are bailed out by financial funding or being owned by the government. In 2008, the famous Lehman Brothers, which was the fourth largest investment bank in USA, went bankrupt after both Barclays and Bank of America ultimately declined to purchase the entire company. In the same year, the US government announced using approximately $200 billion to take over Freddie Mac and Fannie Mae. Similar to Japan, after the burst of the bubble, the bad debts of banks were disclosed and had a long-term impact to Japan's economy. As the asset price bubble is inflating, when the economy goes very well, the value of real assets is highly overestimated. However, once the bubble bursts, the investors get into a panic and sell their assets to minimize their loss. But this action makes the asset price further declines. In property market, many homeowners get into negative equity and are at risk of default or foreclosure. Therefore, after both Japan bubble and the credit crisis in 2008, the price of all real assets decreases, especially the property price, because in those times, the property price is far higher than what they really worth. Property price is then continue to decline until to the normal level. Similarly, in United States, home value dropped by 26% from their peak in June 2006 to November 2010, more than the 25.9% drop between 1938 to 1933 when the Great Depression occurred. Until today, the property price decline is not necessarily stopped.